All right, everybody, welcome back. We've got another awesome guest joining us here at the Crypto 101 podcast. I'm your host, Bryce. As always, joined by my buddy, my compadre, Mr. Brendan Veeman. Brendan, how are you doing today?
Hey, Bryce, I am doing great. At the time of recording this, we are just days before the halving. So it's only fitting that we talk a little bit more about Bitcoin and everything that's happening in the ever expansive Bitcoin ecosystem. So, man, I am hyped up for today's episode.
Yeah, it's funny, Bitcoin is kind of taking a little bit of a backseat to some of the meme coin craziness, the altcoin, the DeFi stuff really popped up here in Q1. But as you mentioned, the halving is this once every 4 years event that constricts the supply of future Bitcoin. It's something that really drives a lot of the price action in crypto, and people are really excited about it. And so we wanted to dive deeper into not just Bitcoin, but what's being built on top of Bitcoin. There's an explosion of new innovation, new technology. It's kind of the Web 3.0 version that starts to meet Bitcoin, because now Bitcoin it's got a stable base layer, but now it's starting to get programmability that's easy. Not easy. I'm not going to say that, but more advanced, more flexible. So anyhow, we wanted to bring an expert on Bitcoin, on programming on it. Professor David Tse, Professor David Tse from Stanford University, who is building Babylon. David, how are you doing today?
Very good, Bryce and Brendan. So nice to be here today.
Yeah, we're gonna have a lot of fun. We keep things casual here. I mean, this is Crypto 101. So I know you're a professor at Stanford. You might teach 501 or 601 level courses. We keep things easy. And so the easiest question I will ask you is to tell us a little bit about your background before we dive into Bitcoin and everything you guys are building on Babylon. Tell us a little bit about who you are and how you came into this industry.
Yeah, so 5 years ago, a friend of mine introduced me to this paper called the Nakamoto's Bitcoin White Paper. Mm-hmm. And before that, I was doing research in a totally different area. Actually, my research contributes towards everybody's daily life, the cell phone. So I was doing research on how to make cell phones communicate reliably and efficiently so that everyone in the world can have a cell phone. So that was my research for many years. And I've made contributions to the protocols. In fact, everybody is using my protocol whenever you use a cell phone. Now,
what's it called?
It's called the Proportional Fair Protocol. So every time you use a cell phone, you're getting data from the base station. And the base station has to figure out how to distribute the data to many, many cell phones at the same time. And I have a protocol which helps them to do it efficiently.
That's epic. Wow.
Yeah, that was my past life. But then when there are 5 billion or 6 billion cell phones out there, then, from a researcher point of view, it's time to move on. It's time to move on to something which is starting from zero or near zero. And that's when I met Nakamoto's white paper, and I fell in love with it. It's such a beautiful white paper, written only in 9 pages, but yet contains so many brilliant ideas. And I got hooked onto it as a researcher. As a researcher, you see all the brilliant ideas in those 9 pages, but you also see all the potential new innovations that you can build on top of those ideas. And that's how I got excited. And I started a new research direction at Stanford. I built a completely new research group with new graduate students and new researchers focusing on essentially how to build secure and scalable protocol beyond Bitcoin. And that was our focus in the past few years. And so I just want to be brief, but one of the contributions we made was on Ethereum's proof of stake protocol. So during the merge, we found some attack vectors on the protocol. And so we report to Vitalik and his team, and we started a very fruitful 1-year-long collaboration to make the Ethereum proof of stake protocol more secure before the merge. So that was one concrete contribution we made to the industry.
That's incredible. And would you, is it fair to say that your work at Babylon grew out of that? I know you guys are working on proof of stake for Bitcoin. It was kind of all that research going on hand in hand, or were you kind of looking at this as a research project, experimental for fun? And then, when you guys kind of hit that, big moment, you're like, hey, let's spin this into an entirely new project or company or whatever.
Yeah, so in our research journey, we started with Bitcoin. That was our first love.
Mm-hmm.
But then
everybody's
Bitcoin,
first love, right?
Yeah. But then Bitcoin kind of fell out of vogue to some extent because it's been sort of all the excitement is on the new proof of stake protocols, Ethereum, for example, Avalanche, Solana, etc., all proof of stake protocol. And so what we came up with, the idea we came up with is actually, Bitcoin is kind of fell out of vogue, but actually Bitcoin has a very strong property, two very strong properties. One is so secure, it's supported by all these miners working on the Bitcoin. And two is it's the largest asset by far, crypto. Ethereum always talk about what do you call it? We're talking halving in a few weeks, but Ethereum always have this, what do you call it? Surpassing Bitcoin in value. What was that term?
The flippening.
The flippening, that's right. The halving and the flippening. The flippening, well, it has not occurred yet. In fact, it seems to be further and further away from flipping. Now Bitcoin is about 3x Ethereum. So what we're saying is, okay, all this security, all this asset, right now, or at least when we started this research 2 years ago, it's like sitting idle. Nothing to do, completely isolated from the rest of the Web3. Web3 is marching on, but Bitcoin is like left behind. But yet, it's still a very large asset. It's still very secure. And so our project, Babylon, is really the idea of trying to combine the best of both worlds. All the innovations with proof of stake, but yet still leverage off all the security and huge asset of Bitcoin to make Web3 even better, even more secure. And so that's the thesis of the project.
Yeah, and you mentioned that, you're building protocols for cell phones, which was arguably one of the most impactful technologies of all time, and now 5 to 6 billion people are using them. So my question is, do you think that crypto can also reach 5 to 6 billion users? And if so, how long would that take roughly?
Yeah. So in some sense, my experience in research in cell phones gives me the inspiration and the long-term faith in crypto as well. So when I started doing started doing cell phone research, I'm revealing my age, but who cares? It's about year 2000. Okay, in those days, it was called 3G. Now we have 5G and moving on to 6G. But at that time, it was 3G, okay? Starting 3G. And at that time, there was no iPhone. And so this whole idea of our research, which is to scale cell phones to make it reachable to many, many people, to carry a lot of data. In fact, we were kind of a bit blind because, there were the applications, the real scalable applications have not appeared yet. But yet we're already thinking about scaling cell phones. Okay. And at that time, it was just basically a sort of a belief that, hey, you know what, if we build it, someone will come. And indeed, after about 7 years of our effort, the iPhone came, and that was history. So that's the belief in crypto as well. We're in the early days of crypto. Relatively small fraction of the population uses crypto on a daily basis. And what we're doing is to prepare for that future, for that iPhone moment for crypto. When we started doing research in 2000, we could not really envision why people would use all this data that capacity that we're providing them. Only when iPhone shows up, then we sort of understand, so that's it. That's what we're working for. And I cannot tell you when the iPhone of crypto will show up, but I have faith that it will show up because I've seen one before.
And so it's fascinating just that, you've been pioneering in technologies that really do have network effects. And these are the fastest growing technologies. And we see one of the big value propositions of Bitcoin is that it's got a network, right? And over time, as that network grows, the price of that asset also grows. And so you've decided, and correct me if I'm wrong, not to build the next iPhone of crypto. You're building kind of supporting technology so that the next iPhone kind of can be built on crypto, if you will.
Yeah, so I'm a basic infrastructure guy. So my experience and my strength is in building infrastructure. And so I'll let someone else build the iPhone, but I'll build the infrastructure that supports an iPhone, right?
And what is that infrastructure?
Okay. So the infrastructure that we're building in Babylon, okay, is basically this. If you think about what distinguishes Web3 from Web2, is decentralization. Okay, you want to decentralize the power away from central authority. But the most important thing about decentralization is security, because once you decentralize, then the power is distributed, and you don't want people to take that power and attack the system. So security is, in my mind, the central innovation of Web3. And what we are doing is, in some sense, we're making that security very scalable by allowing Bitcoin, the 1.4 trillion asset, to provide the security. So let me just unpack this a little bit. Okay. So the future is proof of stake, right? So all the new blockchains are proof of stake. But how does proof of stake chains secure themselves? They secure themselves through capital. So that distinguishes between proof of work and proof of stake. Proof of stake is secured by capital. Well, where does that capital come from? In the past few years, all the proof of stake chains, the capital comes from the native asset of that chain. So typically when you build a new chain, you would spin up a native asset, Solana or ETH or something like that. Mm-hmm. And then you would use that native asset to secure itself. Okay. However, one can take a step back is that, well, actually all we need is a crypto asset to secure the chain. Does that crypto asset needs to be a native asset, which is highly volatile? Or can it be another asset, which is much larger? And so we came up with this idea of using Bitcoin, which is the largest asset, as a staking asset that can be used to secure all these chains. So that's essentially the protocol that we're building. We call it the Bitcoin staking protocol. We love the name because Bitcoin and staking doesn't seem to go together at all, but our protocol combines the two together.
Wow, I love it. It sounds incredible. And I remember back in the day, there were things, altcoins that would use merge mining, and so they would mine, on Bitcoin, and that would secure the network. But it sounds like this is a little bit different. It sounds like you could kind of stake your Bitcoin, which is a very new concept. You could stake your Bitcoin and you could earn a yield for that. Even though Bitcoin's not proof of stake, it's proof of work. So by staking that Bitcoin, you're not actually participating in any consensus, for Bitcoin. Is that right? For instance, you can't buy up, hundreds of thousands or millions of dollars worth of Bitcoin, stake it, and then have some say in how the network operates. Is that right?
Yes. So let me unpack this a little bit more. You talk about a lot of concepts here. First, let's start with merge mining. So yes, that's right. So merge mining is actually a concept invented by Nakamoto himself, Satoshi Nakamoto himself. It is a way for it to share security of Bitcoin with another proof of work chain. So in those days, everyone just thinks about proof of work chain in 2010, 2011. Now, however, nowadays, most new chains are proof of stake chain. So merge mining is not applicable because merge mining is to share security with another proof of work chain. So therefore, we came up with this concept of Bitcoin staking, which you can think of as merge staking, which is to take the asset, instead of taking the work, the energy behind the asset, we take the asset itself and we use that asset to share security with proof of stake chains. So that's the one core concept. Now, second is that Bitcoin is proof of work. Okay. And our project fully respects Bitcoin as it is. We are not thinking of changing Bitcoin protocol itself in any way. So therefore, we are not suggesting that the Bitcoin should be used to provide voting power to the Bitcoin chain itself. The voting power is entirely reserved for the miners who are working very hard to protect the chain. What we're saying, though, is that this asset, this huge asset, 1.3, 1.4 trillion asset, can be used as a staking asset remotely for proof of stake chains, which is not Bitcoin, for other chains, in other words. So that is the core concept. So in other words, any
and it does this by if I understand correctly, it does this trustlessly. So I'm not lending you my tokens to a centralized sort of entity who takes that dollar value and then goes and buys tokens on a different chain to stake them. It's all done through smart contracts. Is that right? Because if it wasn't done, then it would kind of have a lot of custodial risk.
Correct. Nobody should give Bitcoin to me. I'm just a mad professor. And if you give Bitcoin to me, I'll lose them. I'll lose all the keys. So don't give it to me. Don't give any Bitcoin to me, please. Thank you very much. I'm just a researcher. We're just building a protocol. Now, exactly. The protocol is trustless. It is self-custodial. So any Bitcoin holder can lock it in a contract on the Bitcoin chain,
Mm-hmm.
And this is a staking contract. And the protocol is such that this asset can become a staking asset that can secure another chain through the contractual agreement. Exactly. Now, I do want to clarify one point you made, which is smart contract. Okay? Smart contract. Mm-hmm. Now, the unfortunate thing about Bitcoin, or fortunate thing, it depends on your point of view, is that it has no smart contract. In fact, one reason why people believe that Bitcoin has never been attacked before is because there are no smart contracts. So the attack vectors is much reduced. However, because of the lack of smart contract, it's also very hard to build stuff on Bitcoin. The beautiful thing about our protocol is that actually we do not need the smart contract capability. We can build contracts even with the existing Bitcoin so-called scripting language, which has very limited expressibility. In fact, I was just writing this paper before meeting you, and our paper title is Remote Staking with Dumb Contracts. So in fact, we are very proud to be dumb.
I like that. Yeah, less complexity, less attack surface. And I think one of the things that I've seen in my 8 odd years in crypto is that all these smart contracts on Ethereum or Solana, sometimes they just kind of go belly up, and for reasons that can't even be explained. I mean, somebody could just be auditing a GitHub repo and accidentally pull the plug on one. I remember back when this happened to Ethereum, and some random dev just accidentally killed a contract that had hundreds of millions of real world dollars locked up. In Parity, there was a hack, and all sorts of different things along the way. And so what I'm hearing from you is that you guys are using the notoriously robust and strong, resilient kind of language that Bitcoin is coded in, but somehow there is some kind of contracting capability there, but it's not as complex, but it still gets the job done. I guess, could you unpack that a little bit for us?
Yeah. So Ethereum smart contract has this fancy name called Turing Complete. Sounds fancy, doesn't it? Who doesn't want to be complete, right? Who wants to be incomplete? But what Turing Complete really means is that you can essentially write any computer program, okay, on Ethereum, any computer program. So that's very powerful. That's a very powerful concept. But the fact that you can write any program also means you can write buggy programs. You can write buggy programs. And the more complicated the program you can write, the more chance you are introducing bugs. And that's sort of account for the reasons why so many attacks are on smart contracts. It's a smart contract layer attack. Okay. So in Bitcoin, however, Bitcoin is focused on actually not as a platform to write arbitrary applications. It is only focused on one application, which is payments. So the Bitcoin language essentially only allows you to describe, okay, how a coin can be paid, the so-called the spending conditions of the coin. So it just tell you, hey, this coin can be paid if someone signs it with this particular signature, okay? Now, fortunate for us though, it does have a few additional features, very small number, but one very important one is the so-called time lock, okay? So you can lock your Bitcoin, still self-custodial, but you can lock your Bitcoin for say 3 months, okay? And you can take that Bitcoin. No one else can take your Bitcoin. But after 3 months, the Bitcoin is automatically usable again. Okay. So this contract is a very simple contract, but it's still self-custodial. You are still sending that Bitcoin to your own address. It's just that you can't have access to this coin for 3 months. Okay. And this
was kind of in the original Bitcoin code since it started. This feature has always been a piece of that. Is that right?
Okay. So I do not believe so. It's I think it's introduced in about 2014 or 15, if I remember correctly.
Okay.
But maybe let me double check on that, and I'll get back to you offline after this, so that I have a correct record of this statement. It's very important to make correct statement about Bitcoin, because the reason why it's a little bit complicated is because there are 2 or 3 different time locks. And I know that one was introduced in 2015, but I wasn't sure whether all of them were introduced in 2015. But in any case, right now, in the existing Bitcoin script, there is this time lock, okay? So this, as you can see, this is a contract already, right? And you can see that if you want to do staking, a time lock is kind of important because, by staking, you mean you're locking your fund for a certain period of time. If you have no capability and you can always take out your fund, then this is not a security, okay? This is not providing security. So the time lock is a basic primitive that we use to build this. And luckily for us, Bitcoin actually has it.
Yeah, one of the cool things that I saw here recently is that you launched your BTC Signet, and this brought in over 100,000 users. And what we're seeing is that people are constantly being more interested in using Bitcoin for other purposes. We started off with traditional Bitcoin layer 2s, and then we looked at ordinals and BRC20. Now there is, almost the arrival of runes, and then there's the ETFs. Do you think that this proves that people are wanting to expand the Bitcoin ecosystem?
Yeah, the thing is that we a year or 2 ago, we have this perhaps misconception that somehow Bitcoin holders are kind of a different aliens or something like that. That somehow they have some very weird likes and dislike. For example, they don't like to use the Bitcoin in any way. They just want to put it in cold storage. But actually, the reality in the past year has disproved that with ordinals and also with our protocol launching, is that, hey, Bitcoin holders are just like any crypto people. There are many, many Bitcoin holders out there. And like them, they like to do interesting things like buy NFTs, like staking. Staking is such a basic functionality for all proof of stake. Ethereum, Solana is such a basic thing. And now we're telling people, hey, even you with your Bitcoin, you don't have to go and sell it to buy an altcoin to do staking. You can stake it directly with your Bitcoin. And after 6 months, if you don't want to unstake, you can take back your Bitcoin again. It's the same old Bitcoin that you had 6 months ago. So basically, we are disproving, I think, as part of this renaissance of Bitcoin, disproving the fact that Bitcoin holders is any strange species that are different from other token holders.
I love it.
Yeah, and staking's really been on the rise for the last couple of years too. You kind of see staking slowly become the standard, especially over the last decade. We started off with Bitcoin being, the real set standard with proof of work, and altcoins that were created afterwards for the most part, were focused on proof of work. And now the longer that Ethereum has been around, the longer kind of that its model has been here, a lot of projects are navigating towards proof of stake. And I think you're kind of highlighting the properties. And it was only a matter of time before someone like yourself came along and said, how can we start looking at these features to integrate them with Bitcoin?
Mm-hmm.
Yeah, because the thing is that staking is kind of one of the lowest risk use of your token while still having yield earning opportunity. So, in traditional finance, there's this concept called risk-free investment, which is not exactly risk-free, but very low risk. Like, buying a government treasury, for example. Staking is like the crypto analog of that to some extent. And so what we're saying is that, hey, how come Bitcoin with this 1.3 trillion asset doesn't have this risk-free investment option, a risk-free staking option? And our protocol essentially endows Bitcoin with this option.
I love it. And, it's I like the idea of being able to kind of share Bitcoin's security with other applications. As I understand, is it a fair assessment to say this kind of exports a little bit of Bitcoin's security to other applications? For instance, Akash network, which leverages Babylon, or the Osmosis platform, Injective, and maybe about a dozen others.
Yeah. So here, in fact, the exporting of Bitcoin security to other chains is kind of the starting point of our research 2 years ago, as I mentioned. So what we discover is the following, right? A native token of a chain can have many uses. For example, it can be governance. It can be for the economy on top of that blockchain. And it could be staking, okay? But we find that actually staking is kind of one of the not so good use cases of the token because, staking is all about security, right? Security is all about stability. And the native token, especially the early days of a native token, typically is very volatile. So using it as a stable base to secure your economy doesn't seem like, on hindsight, a very good idea. It was how proof of stake was started, but on hindsight, it doesn't seem like a very good idea. And what we're saying is that, hey, with Bitcoin as the most stable crypto asset, and with Bitcoin as such a large supply, why don't you use Bitcoin to provide that stable base for you to build your economy on top of? So that's the kind of the thesis of our project.
And kind of in follow up, am I, if I go and stake through Babylon, am I then earning BTC as my yield, or am I earning tokens from Injective or Osmo or whichever token I'm staking, or is it a blend? How does that work?
Yeah. So now it depends a lot on what what network are you securing using your Bitcoin. So as we build a protocol, then stakers will have option. Okay, they can decide on which network they want to use the Bitcoin to secure. Now, the yield you get will depend on the economy of the chain or the network that you're securing. Okay, so if that network decides to pay in the native token, then you get the yield on native token. If that chain decides to pay in stable coin, then you get stable coin. Now, if that chain happens to be a Bitcoin layer 2, for example, all right, or a Bitcoin side chain, then potentially you could get Bitcoin as the yield as well, because if that economy is trading on Bitcoin, then it could potentially provide Bitcoin yield. So it depends very much on what economies you're securing.
I love it. Is this? I mean, this is kind of very similar to Eigenlayer in the Ethereum world. Is that correct?
Yeah. So let me clarify the differences and similarity with Eigenlayer. So by the way, the Eigenlayer founder, Sriram, is my 15-year-old friend. In fact, we were doing research together when we were doing cell phones and so forth. And in fact, we moved into the blockchain space together about 5 years ago.
Amazing.
When I talk about reading the Nakamoto white paper, we were reading it together. Each of us wrote our first paper together in crypto. So I know him very well. So, so to clarify, one thing is the following, right? Ethereum already has staking, okay? eigenlayer built on top of that to provide restaking. Now, Bitcoin does not have staking. So our main contribution of our project is to provide the staking primitive. So I think a rough analogy is like Bitcoin staking is like Ethereum staking. And of course, you can build an eigenlayer style restaking on top of our protocol Bitcoin staking. And so we are doing that as well. So in some sense, you can think of Bitcoin staking is like Ethereum staking plus eigenlayer restaking on the Ethereum side, except with an asset 3 times the size.
There's a lot of talk with the halving rate around the corner, and we kind of alluded to this earlier, but it seems like the community is split. There's a lot of people who are like, the 4-year market cycle that is paired with the halving is still intact. And then there's people that are saying we're starting to divert. The market's maturing and other stuff is happening. Like, what are your thoughts on the matter? Because I think in the past, everyone's looked at the halving as this, massive, impactful event. And it, typically is followed by this historic bull market. And the market's always moved through this relatively stable 4-year market cycle with parabolic upside and volatile downside. But do you think that 4-year market cycle is still like intact and paired to the halving?
Yeah, so I have to say, you're asking the wrong guy. You're asking the wrong guy. You know why you're asking the wrong guy? Because I am at the heart a researcher, okay? So
Yeah.
I believe in kind of long-term progress of technology. So when we started the Babylon project, it was near the end of the previous bull cycle. Okay? And then everything kind of went down. There was FTX and there was Terra. There were all kinds of things happening around us. It's like news every day. But we just keep on building because we believe in this long-term vision of Bitcoin. And in fact, when we started Babylon, people were laughing at us. Why are you building on Bitcoin? That's like sounds like a stupid idea. You should go with your friend Shuram. You should go and build on eigenlayer. Build on Ethereum. But we never mind. We just believed in Bitcoin. We know that Bitcoin has a very strong intrinsic properties. And now Bitcoin has sort of revived. So in my mind, I just built the technology. Doesn't matter, it's bull cycle, bull market, bear market, just keep on building. So I cannot predict what happens after the halving. But anyway, so that's my answer.
No, and I think that's a good answer. And it's probably one that a lot of people need to hear because it's so easy to get caught up in every little action that happens and every little piece of news, every $10 that Bitcoin moves, right? It's so easy to get caught up in the short term and with what's happening. And then you lose sight of the long term. And the one thing that is proven, up until like literally this month, Bitcoin has just continued to appreciate and its user base has grown and its adoption has grown. And just the whole ecosystem of cryptocurrency that is being led by Bitcoin continues to expand. And so, sometimes a lot of people need to hear that exact thing of like, hey, look at the big picture. Prices are going to go up. They're going to go down. There's going to be this halving. There's going to be another halving. Heck, there's going to be a lot more halvings after this. But kind of looking at that long-term picture and the infrastructure that's getting built behind the scenes is kind of the key things to watch out for when we look at like long-term appreciation.
But I do want to mention this halving a little bit, right? So what is halving, right? Halving is the reduction of reward, okay, to the miners. So halving has a long-term threat to the security of the Bitcoin chain. You may have heard this notion of the security budget of Bitcoin reducing through the halving. And in my mind, that's why it's so important to build on Bitcoin, because you want to get more value to the Bitcoin so that the miners will not only need to get value from the reward, they can get value from the transaction fees, they can get value from the increase in the price of Bitcoin. And that's why it's really important for projects like us, and not only us, and all nodes and layer 2s and other things, to build on Bitcoin to give it additional value to keep the party going.
Yeah, absolutely. Certainly, for the price of of basically for miners to keep mining and have those incentives line up. The price of Bitcoin needs to keep going up, or else they're just going to shut their miners off because there's no incentive to mine. So you get half the rewards, but over time, hopefully half the rewards denominated in Bitcoin is actually the same or more than half the rewards just denominated in dollars. So we're pretty excited about what the Bitcoin halving is going to be able to do. But like you said, I'm just as excited or even more excited about the builders and the developers like yourself who are building applications and really building infrastructure that aren't possible to exist today, but you're building infrastructure for them tomorrow. And so I guess my question to you is, what sort of applications, what sort of front end applications are going to be made possible by leveraging Babylon that would be unable to be built before Babylon existed?
Yeah. So as I mentioned a little earlier, our technology is so basic that is completely application agnostic, actually, right? So anytime you want to build a new application in Web3, if it's a true application, then it should be an application which is decentralized. And essentially, our technology allows you to do that using the cheapest cost in terms of security. So if you think about sort of how to build applications, every application you build, you have to pay some security cost, either directly by building your own L1, or you are on or already on an existing chain which already have a security cost, and you pay fees to that. So any new applications, you have to pay security cost. And if you think about it, what we are providing is that, hey, you can build any application, but at the lowest security cost. Why? Because Bitcoin is the largest, most abundant asset. And therefore, that will keep the cost of security the lowest because the supply is highest. It's just basic economics 101. Since this podcast is Crypto 101, so I bring some economics 101. Economics 101 says what? Says that if the supply of a good is large, then the cost is lower. That's what it is. So Bitcoin is a much larger supply than any other crypto asset.
Fair enough. Well, hey, one of the things that I noticed here recently is I saw that Babylon just wrapped up its phase 1. And this is pretty exciting because you gathered over 430,000 people on your wait list, which is, man, that's a feat in and of itself. So, first of all, congratulations on that. But it kind of begs the question, what's in store for phase 2?
Oh, yeah. So let me clarify a little bit. So we have launched our testnet. We've launched our testnet, and even before the testnet, there were 400,000 people on the waitlist trying to find more information about the project.
Wow.
In the testnet, as you mentioned, we have 100,000 stickers that has appeared within the 48 hours of the launch of the testnet. So it's very exciting. The next step right now is we'll launch the mainnet. Okay. So the mainnet will be launched in 2 phases. So in the first phase, we will provide Bitcoin stakers to come and stake the Bitcoin. Okay, we'll start small with a small cap to make sure everything is secure and so forth, and gradually increase the cap. So this is a little bit like the EigenLayer launch last year. Second phase, we will bring proof of stake chains that will use this Bitcoin staking. So we already have a bunch of chains we're working with right now in the DevNet. And we'll, as they mature, we'll bring some of those onto the mainnet. And then the economy cycle closes where the stakers can now get yield from these chains. So that's phase 2.
Incredible. That's fantastic. Certainly can't wait to see that, and be really exciting to see about all the different partnerships that you guys spin out, and that you could use your Bitcoin. Listeners at home could go, and we'll make sure the links are in the chat, or the links are in the show notes for everybody to be sure to go find where you can stake your Bitcoin. I am curious though, while we have you, just a couple more questions. I'm just curious about how the Bitcoin ETF, which was launched earlier this year, how that's affected your work, your life, maybe even the perception of your peers, other professors who, when you're talking, hey, I'm researching on Bitcoin and this is going to be the big part of the future. I mean, some of your peers, maybe even before the Bitcoin halving, I would imagine maybe this is not a legit technology that's going to be here to stay. And then after the ETF, did like that change the perception of other Stanford and elite college level perceptions of professors?
Yeah, so ETF is really a sign of crypto going mainstream. So I think it does lend a layer of legitimacy to the to Bitcoin in general, to a crypto asset in general. But as I said, I believe in what I believe. What other people believe or not believe is not really my issue. But however, one thing good about Bitcoin ETF is it does attract a lot of more attention to Bitcoin itself. And so it does give more momentum to this whole effort of building on Bitcoin. As I mentioned to you, when we started this project 2 years ago, really hardly anyone is building on Bitcoin. And people thought we were kind of weird to build on this archaic technology from, it's actually from a decade ago. It's not that for a long time ago, but people think, in crypto time, things move very fast. So Bitcoin seems to be very archaic. But I think the Bitcoin ETF certainly brings a lot of attention and price action onto Bitcoin. So I think that certainly helps our project. Overall, it helps the entire momentum to build on Bitcoin. So we ran an event we call Bitcoin Renaissance in East Denver about 2 months ago, and a few thousand people showed up. It's kind of an oxymoron because it was a Bitcoin event as part of a side event to East Denver, which is an Ethereum event. But yet a lot of people showed up. So there you have it.
Yeah, I love it. I've got one more question. I think Brendan might have one or two more before we let you go. But I'm just curious. As one of your big moments, your aha moments, was originally reading that Satoshi Nakamoto paper. You yourself have authored research papers. I'm curious what you think about Satoshi's move to remain anonymous. As a professor yourself, what do you think his motives were? Do you admire this move? How do you kind of think about his anonymity in regards to this really groundbreaking technology?
Yeah, as a researcher, I really admire this move, and I'll tell you why. Okay, so humans are driven by a few very basic things: fame, fortune, and what do you call it? Money. Okay, and this guy doesn't care, right? His Bitcoin is frozen on his chain, never touched. And for a researcher, why do you want to do research? Well, to be frank, you want to be famous. You want everyone to know you. You want to. Why do people want to win the Nobel Prize? Because so that everyone knows about them. If you ask the researcher and say, "Do you care about winning the Nobel Prize?" and they say no, that's probably lying to you. Okay. So I
You
really
heard it here first.
admire.
It's not about changing the world. It's about getting known.
It is about changing the world and getting the Nobel Prize. They will tell you if they're honest. And so I know a lot of these people. I am in the academia for
That's
a
why
long
I asked.
time. I know how big ego academics have, researchers have, and so I really admire Nakamoto. It's really groundbreaking research, and he doesn't care about claiming the fame. That's amazing.
Pretty crazy.
Pretty
Yeah,
crazy.
it's crazy even after all these years. I mean, I'm sure there's a lot of people that would have started Bitcoin in his or their shoes and started anonymous and set it into motion. But I feel like a small fraction of those people would have remained anonymous up until this point today. Because now you have an asset that's worth over $1 trillion in a multi-trillion-dollar ecosystem. And you can't say that it's a little bit tempting, no matter who you are, to be the creator of this thing that is literally like turning the world upside down, the financial world upside down. Like, you have the opportunity to be one of the richest people in the world now. And yet you're right. Like he or they or whoever they are, they don't care about it. The Bitcoin in the initial wallet is untouched. And Satoshi has not come out and said, listen, I am Satoshi Nakamoto. I've created Bitcoin. Here's proof. I'm going to move funds around of the original wallet. Like, none of that's happened. So it's it's just crazy. It takes a special kind of person or group to do something like that.
Yeah,
And
I think it was probably like the Satoshi Nakamoto character. There's got to be some group, right? And there was
yeah,
probably some kind of multi-signature wallet that was set up to make sure that no one person who could have their ego take over, become a villain, and then hack the network. It's got to be some kind of
yeah.
consortium. But
No,
we're just
no,
speculating.
I don't agree. It has to be
Oh,
one. It
okay.
has
Here
to
we
be
go.
one single. It has to be one single individual, because if it's a group, one of the person will be tempted to at least reveal and get their worth of ego boosting. So
Mm.
it probably just one very strong-minded, very strong-willed individual. That's my 2 cents on this issue.
Wow.
I wonder, I wonder if Satoshi's going to take it to the grave. Like, how crazy would it be if, like, right before he died, and then he's like,
Probably an
boom, I
unmarked
was Satoshi.
gravestone in classic Satoshi style, just some unmarked gravestone somewhere
Yeah.
in a cemetery. But yeah, crazy. I think he will.
Well,
He or she.
yeah.
But look, hey, David, outside of Babylon, outside of maybe anything that you're working on, I just want to know, what's one company that you've got on your radar that you think is just an outstanding crypto company that you really admire, maybe their founders, or admire the work that they're doing in the space? What's somebody that you think that everybody at home listening right now should maybe go check out and keep on their radar?
So one thing about, I don't think I'll highlight one company or one project, because I have a lot of friends in this crypto space, and so I don't want to do that. However, I would like to highlight one thing, right? Is that there are multiple projects which I really admire in the crypto space, which are really driven from a long-term research vision.
Mm-hmm.
And that's kind of rare outside in the Web 2, Web 1 space, because typically the researchers have a very peripheral role in forming big companies. Whereas here in crypto, you can think of projects like Arbitrum or like EigenLayer that you mentioned, or like Babylon. They are really driven by researchers. Arbitrum, for example, right, was founded by a professor in Princeton, Ed Felton, and his 2 graduate students, 2 PhD students. So it's really started from a very long-term research vision driving this project. Arbitrum, the technology is really interesting. It started this whole wave of optimistic protocol, optimistic layer 2, and the EigenLayer as well, very research driven. And I can name also many other projects like Starkware, also driven by very fundamental long-term research by Professor Elliot Ben-Sasson. So a lot of these projects, not one, not two, not three, but many of them are really driven, and a lot of ZK zero knowledge projects, some of them driven by my students at Stanford, in fact. I was teaching them one moment, and the next time I know, they were raising fund at 55 million from Paradigm.
Wow.
So it's kind of like pretty crazy, and they're just taking research like, no one knew that it could be practical a few years ago, and then they make it work. It's just amazing energy to drive this whole industry forward.
Absolutely. No, we love to see it. We love to hear it. This has been an incredible conversation. And David, we got to leave it there. But we want to know, where can people find out more? Where can people follow you on social, or you have a newsletter? How do people kind of stay in touch and learn more about Babylon?
So I think you can go to our website, babylonchain.io. That website, you have a lot of information. You can also go to our Twitter, Babylon_chain. That's our Twitter handle. And there are a lot of information there.
Perfect. Well, hey, thank you so much for spending the hour here with us today on the Crypto 101 podcast. And to everyone at home listening, thank you for joining us. And come back same time, same place next week, and we'll have another amazing guest with you. So thank you guys for joining, and we'll talk to you soon.